on the map. This is Ron Costa broadcasting another mobile episode here today in New York. And today we're going to be talking a little bit about Regulation A. We're going to bring on a great mind on Reggae. He's doing so much good stuff as our guest. But before that, let's introduce Vicky Hachmala from the World Token Market. Vicky, how are you doing there in Vegas?
I'm doing fabulous, Ron. It's exciting. It's cooling down. It's only 110 today, and that's good. And
yeah, I can't wait to get back there.
Oh, yeah, you can't, because where you are, there's bugs. Where I am, there's not.
Exactly, and that's the bugs, not the political bugs. So,
well, whatever. Yeah.
but we do have a great show. Yeah. If you're an issuer out there, you want to listen to this one for sure, because this is going to be great information for issuers. So let's get this thing started. Let's introduce Darren Marble. Darren's the CEO of Issuance. He's also the co-CEO of Crush Capital. Real interesting stuff. Darren, how are you doing today?
I'm doing great, Ron. Thank you, and thank you, Vicky, for having me on. And Ron, it's great to be back with you, man.
Yeah, I'm really psyched. It's been a while, but time flies. And just as usual, Darren, you're out there all over the place. I see all your posts on LinkedIn, all your articles, and I got to say, out of this whole Regulation A industry, you're probably one of the biggest players, the biggest hitters, I would say. And I'm really happy that you're taking some time out to be on the show. So thank you right off the bat. This is going to be great.
Well, listen, it's my pleasure, and I'm excited to say that we've never been busier. The Regulation A plus industry has had its fits and starts, but right now I think there's more activity in this industry in terms of new companies, new issuers coming into the fold, filing offering circulars to raise capital or thinking about using Reg A plus than we've ever seen in the past 5 years. So really promising and really excited about what the future holds for the space.
Yeah, COVID be damned. It doesn't matter. And we're still seeing so much movement now. It's really, really interesting because, like you said, there was a while there where it kind of took a little dip, but it's back. And let's talk about what you're doing a little bit. Actually, let's go into your background a little bit. Can you just give our audience a really quick overview of your background and how you started your first company and how you got into this whole thing with Issuance?
Yeah, it was a long and windy road. I'll spare you the gory details, but long story short, we really cut our teeth marketing rewards-based crowdfunding campaigns about 10 years ago. We had marketed 100 Kickstarter and Indiegogo campaigns before we transitioned into the Regulation A plus industry, and we were fortunate to be part of the first Regulation A plus IPO ever for Elio Motors, which launched the day that the Reg A securities exemption went into effect in the U.S., June 19th, 2015. And from that campaign forward, we basically dropped the rewards-based crowdfunding marketing. We went all in and just fully pivoted into equity crowdfunding, Regulation A plus. And then since then, we've now marketed literally dozens of campaigns, helped clients raise almost $250 million in the past 5 years. And we've had the ability and fortune to be able to experiment early and often, trying different marketing strategies and tactics to see what works, what doesn't work. Facebook ads, Google ads, stories in the New York Times, the Wall Street Journal, getting a client featured on Kramer's Mad Money, trying to find companies that already have a built-in audience, et cetera. Now working with financial publishers that have an audience of tens of thousands of paid subscribers that read a newsletter, getting them to cover the deal and do a promotional campaign. Started with rewards-based crowdfunding, transitioned into equity crowdfunding, Regulation A plus, and haven't looked back.
Now, was your background in fintech as well? Did you have any experience in that before this whole Kickstarter stuff and the rewards-based?
Looking back, the short answer is no. So my background is really in enterprise software sales. I spent 10 years selling Oracle database applications to Fortune 500 companies. In the middle of that career, wanted to start my own business, become an entrepreneur. And the first company that I started more than 10 years ago was really a social networking site for filmmakers. And what we learned is that it's really hard to promote talent and promote films, but that if you could promote a film or promote an actor, there was something to that. And so that was kind of the genesis for what became CrowdFundX at the time. We saw all of these early creators and entrepreneurs trying to raise money from the crowd. And so we were designing, campaigns where we would, go to blogs and do a couple $100 in Facebook ads and trying to drum up awareness. And we really got into it by accident, but became passionate about the industry, became passionate about helping creators raise money for their projects, and now to help bigger businesses raise equity or debt and sell securities to the general public to build their businesses.
I think CrowdFundX transformed into Issuance. Is that right?
That's correct. So I started Issuance about 2 years ago with a different set of co-founders, and we've created a technology platform that we white label, and it allows companies to run a Reggae Plus financing on their own website or their own domain. So think of it as a platform in a box, really more of a technology company. CrowdFundX was an agency. We provided marketing services, media buying campaigns, traditional agency work. So we rolled up, or I should say Issuance acquired the assets of CrowdFundX about a year ago in February 2019. We've effectively sunsetted the CrowdFundX brand, and Issuance continues to exist.
Okay, and now let's talk about this Issuance portal in a little bit of more detail, because this sounds like it's something that every Reggae issuer needs to be aware of. So let's explain, why would a Reggae guy need this?
That's a good question. I think the alternative to a white label solution is running your Reggae financing on a third-party platform or portal. And so I'm not going to name names, but when you run a campaign on a third-party platform, you effectively dilute your brand. You're now introducing a third party that's generally unknown, and they become the intermediary. So you drive your customers, your investors, to some other company's platform where they can then click around and find 10 other deals to invest in and may get distracted. It's like sending somebody to YouTube and saying, watch my video, and then there's a billion other videos they can click through to. Maybe not the perfect analogy, but I think it's good enough. So what we've created at Issuance is a solution that allows a company to raise capital on their own website. So for instance, Tesla.com/invest. You own the investors, you own your data, and I think we've developed the industry's leading user interface and user experience that makes it very seamless and easy for a retail investor to buy Reggae securities in a matter of minutes and then purchase those securities with ease through credit card, wire transfer, ACH transfer, even an IRA retirement account. And so the key is to make it really easy for the investor, very seamless, very clean, easy to use platform, and at the same time to allow the issuer to run the campaign on their own website, their own domain. They own their investors, they own their data. That's the technology platform that Issuance has developed, and it's becoming increasingly popular in this market as we're seeing more and more companies go down the Reggae path.
I agree with you, Darren, that a lot of companies, they think that somebody else can help them to bring investors to them by using their platforms, but you're absolutely correct. If you bring other people and you allow them to look at other investment opportunities through a third party, they're going to forget why they came in the first place. They're going to forget about you because there's going to be something greener on the other side of the fence. So that's very important, I think, being able to control who comes to your site and not let them get distracted with other people. I think that's vital.
No, it's really true. And again, I'm always fascinated by this industry because we've seen it evolve and take different turns over the years. It used to be very commonplace for a company to go seek out a third-party platform. In fact, a lot of the early deals we did, we brought to platforms, or platforms came to us and asked us to run the marketing for the deal. And now I think that's really passé. I think that might even be a mistake for a company to work with any third-party platform when you can just as easily run the campaign yourself and control it end to end.
Yeah, and that's not even mentioning how important and expensive marketing is. We did a couple of podcasts earlier on the marketing of these Reggae deals, Darren. And can you imagine spending all this money on marketing and sending your investor to for them to invest in another project? That doesn't make sense. That's not a good thing.
No, and then the platform
that's
ends
silly.
up. Yeah, they remarket to those investors. And so if you bring 5,000 investors to a third-party platform, sure, they're your investors, but the platform owns them as well. And now they're going to pitch them the next 15, 20 deals that they launch. You don't know who those companies are. In fact, you may disagree with the business or the founders or the investment itself. And so that's one of the real issues here. And I think one of the reasons that Issuance is having a lot of success and traction in this market, it just makes more sense to run a campaign on your own site.
Well, and absolutely, because the third-party platform, they're not invested in it. They don't care if you're successful or Joe Blow is successful because they're still going to get paid regardless. So it's important that after all the money that you spent on marketing and getting everything set up, that you keep your investors to yourself and not give them to somebody else for free.
No, right. That's exactly right.
Yeah, yeah. All right, so let's say I'm an issuer right now, and I'm thinking about doing this Reggae offering. I want to do it on my own website. What's the process in terms of like how do you start with this guy? I mean, you obviously have to vet the deal first, right?
Yeah, our strategy's really evolved in the last 12 months, and where we've had a lot of success in financing Reggae deals is by presenting them to the financial publishing community. So these are independent financial publishers that run paid newsletters. They monetize their subscribers who are investors looking for interesting investments. And what we've found is that a number of these newsletters are now moving into the Regulation A+ space because they can effectively monetize anyone over the age of 18. Anyone over the age of 18 can be a paid subscriber to XYZ newsletter. So what we do is we gather, kind of standard information on the deal, what's business overview, who are the founders, traction, revenue, net income, revenue growth, as well as the terms. What's the price per share? What's the pre-money, post-money valuation? Are there warrants? What are the terms of the warrants? And then we present the deal in a standard format to our publishing partners. And if we get a verbal commitment from one or more of our publishing partners, we then will contract the issuer because we know there's a financing there. And as a quick example, we've had clients raise almost $25 million. Even a pre-revenue company can raise $10, $15 million with the support of the right financial publisher or publishers. So these groups have proven to be a very valuable and really incredible source of retail distribution for these deals. And this is a change from what we used to do, which was sign, the deals that came our way, prepare a marketing campaign, execute the campaign. Well, most of the work happened after the launch. Now what we're doing is we're working to ensure the success of the deal before we even sign a client. So if we have 5 deals and we present all 5 of them in that format to our publishing partners, and they really like one of those deals and are really not interested in the other 4, that's the one deal we'll take. At Issuance, we'll pass on the others because we know with their support, these companies have the ability to raise $10, $15, $20 million or more in maybe 3 to 6 months. So it's a new innovation that we've brought to market and we've had a lot of success with. And the beauty of this model, by the way, is that the issuer is not compensating the publisher. They're not paying cash to the publisher. They're not paying stock. They don't have a contract with them. Neither do we. So it allows the publisher to present the investment opportunity completely independent. They're not biased. They don't have to disclose that they've received any compensation because they haven't. So it's a really valuable model, and it's been really successful, I think, and will continue to be in the months ahead.
It's brilliant. Yeah, it's a great strat. It's almost like
absolutely brilliant.
Yeah, it's almost like testing the waters without testing the waters in a way, because you're judging interest beforehand from the publisher end of it, and it sounds as if that is a great pipeline to get, because these publishers have mailing lists or subscribers lists in the thousands, right? Don't you think?
Absolutely. I mean, and the audiences differ, but for instance, like we have one publisher that has 10,000 paid subscribers that pay $3,000 a year. Another partner has 20,000 subscribers that pay $100 a year. So they have what they call, front end, back end offers. But what we're seeing is that the publishers that have a subscriber base of individuals who are paying north of, let's say, $1,500 for the subscription, these investors are highly engaged. They tend to be maybe in their 50s, even 60s. They have disposable income. This is not their first time making an investment. This is not a millennial or a Gen Z, trying to do this for the first time. These are people that have investment experience. They might be very savvy. They could be accredited investors as well. They're looking for alternative investment opportunities, and Reggae Plus has a plethora of those opportunities. And so when you have somebody that's paying $3,000 a year, and then they get, a campaign and a deal that looks really interesting, that person could easily put in $5,000, $6,000 into that deal. You multiply that by 3,000, 5,000 investors, you've got a $10 to $20 million outcome on your hands. So it's a very, very powerful model and works especially well with publishers that have a premium product, and that premium product I'll define as something that sells for north of $1,500 annually. At that level, the audience is highly engaged in looking for interesting investment opportunities to participate in.
Well, and what makes this concept so exciting is basically you've eliminated the ones that may or may not be successful, and you're going with the ones that will be successful. So you kind of eliminate the riffraff and just stick with the one true fact. That's going to give you.
You're spot on, Vicki, and I'll tell you, our track record at Issuance in the last 12 months has been 100% because of that approach. Yeah, and look, it's great for us. It's great for the client, and it also eliminates, a failure rate. I would say in the past 5 years before this model, our track record was somewhere around 70, 75%. 1 out of every 4 deals that we signed at CrowdFundX, for instance, failed to meet their target. Now we have a vetting process that allows us to really hone in on the deals that we know will have incredibly strong retail distribution behind it, and we don't sign the deal until we get that verbal commitment. At that point, we engage the issuer. The issuer knows that there's a financing opportunity in front of them, and it's a win-win-win. It's a win for the issuer, the publisher.
Absolutely.
So it's a good model.
It's a win-win for everybody, especially the investors, because they know that your track record is 100%. Why would they not invest with you? So it's like you said, win-win for everybody, and everybody smells like a rose in the end. Absolutely fabulous.
Well, thank you. It's been it's been an interesting transition, and I think it's part of what's fueling the reggae industry right now. Is the word is getting out that these companies are being able to raise $10, $15, $20 million. And you look at that same company and what their alternative might be. And I just posted this on LinkedIn, but incredibly, in some cases, it's now easier for companies to go out and raise $10 to $20 million from thousands of investors. It's easier for them to do that than to raise a traditional private placement from just a few investors for the same amount.
Isn't that amazing?
I never thought I would say that, and I used to tell companies all the time, look, if you can go out and do this, 5 investors, $10 million, family offices, fast, easy, quick, get it done. And I still believe that, but my point is that we're seeing companies have a lot of success with this method. And so when it works really well, and it's an incredibly attractive alternative for companies. I just think we're really breaking down the barriers to the capital markets with this securities exemption, and Reggae is really starting to take flight.
What a concept, Darren. Make sure you're going to be successful before you go through the process and be successful at the end.
That's my goal.
Simplicity at its finest, but nobody's ever thought of it.
Yeah.
Well, here we are.
And Darren, before we move on to the next thing that you're doing, just a couple more questions on this Issuance platform. Does it integrate with like broker-dealers and transfer agents and things like that?
Absolutely. So we have an escrow integration to Prime Trust. They provide escrow services, funds processing. We integrate to transfer agencies so that we can provide shareholder information by the thousands to the issuer's transfer agent. Absolutely. And again, that was really the impetus to start Issuance, was to create a fintech company for the securities industry, Regulation A+, specifically, of course, and to really have a platform that only provides a solution, for this type of capital raising, and to own the space and to become a dominant player in it. And so we're continually evolving and optimizing the platform based on feedback from our clients, our partners, the industry at large, and it's been a lot of fun.
How do you treat the AML KYC issue?
Well, every investor has to go through a KYC AML check, so know your customer, anti-money laundering, and that's performed prior to the subscription being approved or processed through our platform. So that happens thousands of times in these deals, and it's able to be done online in short order, and a fairly seamless process for the investor. So we've had campaigns where there's $20 million raised and 10,000 investors are subscribing to the offer in 90 to 120 days. So we've gotten it down to a science. Again, we continue to optimize, enhance to make it easier. And yet to do it all in a compliant wrapper, because compliance is a huge part of the industry. As you know, KYC, AML are part of the compliance process when an issuer raises capital under Reg A+, and you have retail investors come into the offering. But that's baked into the system.
Nice. Okay. And then what is the cost for this and do you do it on a case by case level for each issuer?
Good question. So we've standardized our pricing, and we've changed our model from what we had a few years ago. So when we receive a commitment from a publisher to run a campaign for one of these offerings, our model is pretty simple. We charge a retainer of $25,000. Once the company is SEC qualified, we then charge $25,000 a month for the duration of the offer, and then a $30 fee per subscription processed. And so ultimately, the bulk of our fees now are earned on the back end of the deal, meaning that the upfront fees we charge essentially $25,000, and then the rest of our fees are incurred after the company is both qualified, the campaign is live, and the issuer is actively taking in capital, and those funds are clearing from escrow into their account. We used to have a model where we would just charge every month we performed services or did work, and this way, I think we're more aligned with the issuer, and the bulk of our fees are generated in that $30 per subscription processing fee. That incentivizes us to bring in 5,000, 7,000, 8,000 investors into these deals. We earn more revenue in deals that outperform and have thousands of investors. That's our basic model. And then I think overall, people ask, what is the total cost of capital with other service providers, et cetera? I think it's somewhere between 8 and 12% at the end of the day. So on a $10 million Reg A financing, an issuer might expect on average to pay about $1 million in costs for marketing, legal, technology, audit, et cetera, broker-dealer of record. And again, the bulk of those costs are incurred by the issuer post-qualification after they're raising capital, not beforehand.
Yeah, that's a kind of like a generic thing. Now, you're talking about all costs, legal, accounting, everything,
correct.
Right?
That's correct.
So whether you're a pre-revenue company or whatever, you should expect to be spending about $1 million to do your Reg A then. Would that be a safe bet?
That's correct. And again, it's on the back end of the offering, not up front. And I think the cost of capital does decrease with more capital raised. So in a $20 million financing, cost of capital could be 7 or 8% versus 10 or 12.
Are most of these issuers going with the tier 2 route?
Almost all of them. You know, Issuance only does Reg A Tier 2. I know there are companies that do Tier 1. I'm not sure why they do that, but I think there are a handful of Tier 1 offerings that are out there. But everything we do, and I think most of the service providers are focused in the Tier 2 space, where you can raise up to 50. Issuers are blue sky exempt. They have to provide audited financials. But that's the preferred route in the Reg A space.
Yeah, it's interesting because a lot of people will talk about Reg A and think, oh, well, you know, I can kind of do this on a shoestring, and that's not the case if you want to do it correctly. But it's nice to have that source, that resource that you guys have, and especially what we talked about before, it makes your deal so much more likely to be successful and to raise those investors. Yeah. So it's definitely worth the money, I think, if you're going to anything that heightens the level of success, you got to at least look into.
Fully agree.
Absolutely. That's what makes your platform so special, Darren, because it's expensive to do this, and why incur the expense if you don't think you're going to be successful? So that makes that's even more why your platform is absolutely special.
Well, yep. Vicki, you're hired. You're going to start next week on the Issuance sales team.
Well, yeah, no doubt about it there. Yeah, Vicki gets sales jobs every time we do a podcast. It seems incredible. But you know, moving along those lines, Dan, we got to talk about your next thing. This Crush Capital. That sounds real interesting too. Can you give us an idea about what you're doing with that?
Absolutely. So really excited to share that Crush Capital, which is another company I'm a co-founder and co-CEO of, has announced that we're casting for season 1 of Going Public. Going Public is a new original series that follows the stories of 5 founders as they're out raising capital, taking their companies public to NASDAQ in a Reg A Plus IPO. And for the first time ever, we're allowing viewers of this show to actually invest into the IPOs while they watch. So this is really a first of its kind series. It's taken several years ultimately to get the infrastructure in place, but we just announced the Going Public series about 10 days ago. We've been inundated with companies applying to be featured in our inaugural season, which will be streamed online on entrepreneur.com sometime in Q1, Q2 next year, maybe March, April. So we've signed a distribution deal for this show with a massive digital platform. Entrepreneur is a 40-year-old media brand. They have a legacy magazine, Entrepreneur Magazine, that still goes out 10 times a year, but they were one of those brands that transitioned early into digital. They've got about 15 million monthly unique visitors that hit their site every month. So this series is going to be streamed on entrepreneur.com, and we're forecasting about 2 million unique viewers per episode. So season 1 of Going Public is 10 episodes. The episodes will be about 25 minutes in length, released weekly, and it's an opportunity for the general public to follow these companies on their journey to an IPO. And then as these companies are progressing, the viewers can click to invest, to become an owner in the business. And what they're buying are IPO shares at the IPO price. Really excited to get this series out there and get it into production.
How do you decide which company, if you're going to have 5 companies and you've got all these applicants, how do you decide which one to pick?
It's a great question. So there's actually 3 different companies that are involved in that decision-making process. So one is Crush Capital. My co-founder, Todd Goldberg, and I are the principals of Crush, which is the creator of the Going Public series. So the deals first come to us. If we like the company, if we like the deal, we send it to our production company, because this is a production at the end of the day. They're going to look at the deal from an entertainment perspective. Are these founders charismatic? Do they have a good story? How do they look on camera? Are they confident? Are they nervous when they interview, or are they at ease? If the producers like the deal, then it goes to our investment banking partner, which is Roth Capital. So Roth Capital will perform a traditional due diligence and underwriting on each of these deals, bad actor check, all the things that happen in a diligence process, and ultimately apply a price per share valuation and underwrite the deal. most interestingly, Roth has committed to do what's called a firm commitment underwriting in these IPOs, which has never happened in the Reggae industry yet. And what that means is that they're essentially guaranteeing the deal. So if Roth firm commitment underwrites a $30 million IPO, they're going to buy $30 million of securities the day before the IPO and essentially allocate to the investors the next day, which will be a mix of institutional investors and retail investors. So Crush looks at the deal, producers look at the deal, Roth Capital looks at the deal, essentially 3 organizations to really identify and contract the right 5 companies.
Well, yeah, because it goes back to that same concept. You want to make sure that whoever is on this show is going to be successful in the end. You don't want it to, fizzle out for whatever company you get. So same concept. Make sure you're going to be successful before you even start.
No, that's right. Absolutely right, Vicki, and it's a really great point. Is we've spent a good 3 years laying the tracks for this series, and now it comes down to casting. And this series is not like Shark Tank, where we're going to make fun of entrepreneurs and tease them or ridicule them, take advantage of them, which I think happens a lot, unfortunately, in that show. And nor is this an American Idol show where we're going to throw up a really terrible candidate so people can poke fun at them. We're looking to highlight incredible companies, quality investments, companies that could become the next Amazon, the next Google, and really have an impact in the world and society and in business. And we want to bring back the small cap IPO with the show. So it's really important for us to identify 5 incredible companies. So the standard to be selected for this series is very high, higher than any standard that we might have applied in the past. Because we're only picking 5 companies out of the gate, we want all 5 to be good opportunities for the general public. You're absolutely right. So it's a really kind of key focus for us in the next few months.
Yeah, and it's a real good educational thing too, because a lot of people will look at this and they'll say, oh, look at how these people are moving forward with their IPO. They don't teach that kind of stuff in business school, and maybe you learn some insights by watching this series. So your target audience is amazing, because there are a lot of people out there that would want to know this information and see the highs and lows of what these entrepreneurs go through.
That's exactly right, Ron. And on that point, education is really important to us. It has to be. We feel that we have a responsibility to educate the general public about capital markets, about the IPO process, and that's a duty. It's a responsibility that we bear being the creators of a series where people can invest in IPOs. We take it very seriously. There's a number of ways that we will educate the general public. One is through a library of content on the goingpublic.com site. Articles, video, a lot of content that it will be available for anybody to peruse and read or view at their leisure to become more familiar with capital markets and the IPO process. And then the other way we educate people is through the series itself. So we're about 4 weeks out from announcing a host, and we've got an incredible young female candidate who was a former trader on the floor of the New York Stock Exchange. And it looks like this is going to work out for us, for her. And the role of the host is to essentially advocate for the viewers of the series. It's to break down what might be complicated financial concepts and make them easy for the average person to understand. So a communicator, a translator, providing awareness, providing definition, context, and insight into the process. And then as well, there are mentors in the series. These are individuals who might have taken their companies public 10, 20 years ago to NASDAQ. They've been through the process. So these individuals have insight because they've been there, they've done that. They come in to coach the entrepreneur who's now in their shoes, 20 years later, going through the same process. And I think that's also educational for the viewer as well. So education, becoming, increasing one's financial IQ, really top of mind concept for us, and something that I think is a real interesting opportunity and something we take very seriously as we're going through this process.
That sounds great.
And that's,
sounds
you know, that's what makes it so special, Darren, because it's not a show or a series where you're, like you said, you're going to make fun of this company or that company and pit everybody against each other and come up with the ultimate winner. Instead, it's a fabulous concept where you're going to have 5 companies, and you want each one of them to be as successful as they can be. They're competing for investors, but each one is going to get a ton of investors over the 10-week period, and they will all be successful in the end. That's just, you know, I don't even know what to say, Darren. This is just one of our most favorite podcasts because, like you said, Ron and I have an obligation and a duty to educate people, and this is something that everybody needs to know.
Well, listen, Vicki, I really appreciate that, and we're extremely passionate about it. And you know what really drives us is the idea that customers deserve an opportunity to become owners in businesses whose products and services they use in their everyday lives. And you know, let's look at what's happened in the last year or two in traditional capital markets. These big tech companies. Let's pick on Uber and Lyft just for a minute, because they're easy targets. These are big companies, so they can be picked on for a minute. These are businesses that are built on the backs of millions of customers, millions of everyday Americans. I'm sure all of us have these apps, and probably 95% of the people listening to this podcast use Uber, use Lyft, or use these services. And it's not just these companies. The list goes on. Peloton, Sonos, all of these big companies, and yet we can't invest. So what are we left with? Well, we're left with a company that goes IPO 10 years later. All the value has been wrung out by the early investors who put money in the Series A, the Series B, Series D financing, and the general public, the millions of customers who were a critical part of this company's success, are left to buy the shares of these companies after they're public. And how much opportunity is there to earn a return on your investment in a company like Uber that's raised how many billions of dollars and stayed private for how many dozen years? And can the stock price really 5x? It's very unlikely. So what we want to do is allow the customer to become an owner in a business at a much earlier stage in that company's history. What if Uber had allowed its customers to become owners of the business 8 years ago, 7 years ago, in a Reggae Plus financing? Maybe it was a $50 million financing, and there was $25 million of institutional demand, and then they let their customers come in for the other $25 million. That is what needs to happen, because that is what it is actually fair and transparent, and a true equal opportunity for the customers. So we are advocates for the general public. We're advocates for customers, and we think that it is unfair and wrong to allow these companies to stay private for so long only to have the customers be able to buy shares in the secondary market. We're changing that with this series. Now the customers can become owners and share in the upside. That's the opportunity for wealth creation that we want to serve up with this series, and it's what drives us.
Wow, what a closeout on that one. That was great, Darren. Darren, listen, if someone is looking to contact you, what's the best way to get to you? Where do you get your websites out there? How do people find more information about what you're doing?
Well, companies that are interested in learning more about the Going Public series can go to goingpublic.com today. They can apply today to be considered for the series. Companies that are looking for kind of more general Reggae Plus financing opportunities can go to issuance.com. And then I'm very active, as you know, on LinkedIn, as well as at Twitter or on Twitter, same handle, Darren Marble. And that's usually the best way to connect. And really appreciate, Ron and Vicki, the opportunity to be on the podcast and share a little bit about what we're doing in the space. And I want to commend you guys for your focus and commitment to this industry. It's still a very small industry at the end of the day, 5 years into it. And there are a handful of people that were involved early on and continue to be resilient and passionate, and you are two of them, and I really appreciate you guys being a part of this space and amplifying voices from the industry so that we can continue to educate and inform people, companies that want to raise capital and build their businesses, as well as the general public who might be looking for investment opportunities. So thank you guys.
Well, our pleasure, Darren.
And Darren, when going public becomes a huge success and you become well known and host the Oscars, can you maybe get me a ticket to the event?
You guys will be sitting right next to me. Let's do it.
Okay, we look forward to it.
Me too, absolutely.
And lastly, boy, that's pretty solid. Goingpublic.com. I'm impressed you got that domain. That's a good story in its own right. How was that available?
It wasn't cheap. It wasn't cheap, but we had to have it, right? So hey.
Yeah, that's great. That's great. All right, everyone. Listen, you're listening to the Mappable USA podcast at mappableusa.com. You can go to that website. You can scroll down there. You'll see all our syndication sources. Pick the one you like best so you'll never miss another episode. If you want to be a guest on the show like Darren was today, just fill out that form. We'll see what we can do about getting you on the show. If you like what you heard today, send us an email, info@mappableusa.com, or just leave a comment on the page that you're listening to this on right now. So we appreciate all your support. Thanks for listening. We'll be at you next week with another Mappable USA podcast. Have a great week, everyone.